What's going on YouTube and cryptocurrency family? My name is Harry and I'm a crypto vet. Thank you for tuning back in. Lots of exciting things happening still in the crypto market. We are in a bull run, but it definitely needs to slow down. And in this video, I'm going to go over some stuff with Bitcoin and why I think we're getting really close to a top. And if you haven't taken profits already, sorry, excuse me. I highly recommend that. It's not financial advice. I'm just a doctor/idiot. But, make sure you always are securing what you have, and, just remember nothing goes in a straight line forever. So if you haven't already, please like, subscribe. If you haven't joined the Discord, please feel free to hop in here completely free. I have tons of technical analysis channels that we go over, and if you want me to do any analysis on any other coin or new projects, there was several people in the Discord who kept pushing graph on me at 3 cents, and I actually didn't have time to look at it. Luckily I got in around 30 and back out at around 60 on some of it, and I'm still holding a little bit, but I'm talking like just $100, because I just didn't want to allocate other things at the time. So lots of awesome things happening in here. And then also, be sure to follow me on Twitter. I post everything up. I'm growing in followers. I'm not looking to get more followers. It's only if you want to see my trades and things as I do them. It's the fastest way to do it. But let's go ahead and get started here on CoinMarketCap. Bitcoin right now still pushing at that 29,000 every couple hours or so. Sometimes it sets a new high. Ethereum is right above the 737, 740 part. If we get above 750 and Bitcoin doesn't crash, we could be seeing $800+ Ethereum. But I'll try to get to that in another video. XRP recovering a little bit from its massive dump due to the SEC lawsuit, as well as Coinbase and many other exchanges delisting it. But I'm going to go over that in the video right after this one. So as far as the biggest gainers go, we have Polkadot, awesome project. It was $5 2 days ago. Look at this increase here. Then as far as the biggest losers go, XRP is no longer at the top of the board, but still not many big losses here. XRP was the main guy who got screwed. All right, so here we're on the Brave new coin liquid index for Bitcoin, and I have it on the monthly chart. The reason I have it on the monthly chart is the monthly candle closes in 4 hours and 10 minutes. And I want to bring this up here, and I took all my other weird indicators off because I know that confuses a lot of people, and I mostly use that for trading on derivatives, or if I'm just trying to catch a quick pump, get out of that coin, whatever I'm trying to do. But let's go ahead and here just stay on the monthly chart, and I'm going to just do some fib retracement as well as some trend-based fib extensions. And the reason I'm going to do these two tools is mostly because everybody asks me, how are you predicting where the tops are? How am I making assessments on when we may have a pullback and everything? And it all comes down to I take a big picture, because the big picture is what matters most, and then I also zoom into the small time frame, sometimes as low as the 1 minute, but the 1 minute can be difficult. So 5 minutes is usually about as small as I go down, and then I try to see if I start to see some bullish patterns develop in the 1 minute or the 5 minute. I'll check on the 15 minute all the way up to the hour, to the 2 hour, 4 hour, and beyond, just to see, is this the spot where a trend reversal could happen? All right, and then this isn't a guide to how to do high leverage trades and do things like that. You can come up with a strategy as such, but for me, I'm looking for the big 5 to 10% changes, even bigger, and those are where I'm looking to actually make my shorts or longs at that point. So first here, we're going to go ahead and just take the trend base fib extension, and I'm going to go all the way back down here to the bottom when we were at a penny. We're going to come up to the top of this rally, which is somewhere around here, and we're going to come down to the low that it experienced, and I'm just going to drag this out. All right, and we can see here that this rally came all the way up to the 4.236. So if we were way back here in 2012, we could see that this was how high Bitcoin went during this time. All right, so I'm going to take the same tool again. I'm going to go to the low here, to the high that we got in the next rally, which would have been 2013, and come down to the low that we saw. And what we can see is we got up to the top on this one, and then kind of consolidated before we had another pump. So we're going to come back, and I'm going to move it to here, so you can kind of see that we have a little bit of an overlap here from top to bottom, top to bottom. And I'll drag this one a little bit further this way. So we're kind of starting to see a little bit of a pattern here, right? So if I come back and I go the next low to the high, and then back down to the next low, we are now where we're at here, and we're going through. So if we kind of zoom in on these here, and I could have done another one even further down here. Well, we're seeing that we're getting up to around the 4.236 and maybe a little bit beyond on this one here. One of the interesting things that I saw on this chart before we continue on and how I'm using the fib based is if we check here and we kind of just take this one and extend it over, we can almost see this little like falling off the cliff here, right? And this was the first time in Bitcoin's history that we extended past this 4.236. You know, and the Fibonacci levels is purely a psychological level that is based off of fractals and ratios that traders use on the graphs to see, you know, where is buying and selling going. And I just thought it was kind of unique that right here in this area was the first time that we overextended this from a high to low, high to low, high to low, and you know, we've kind of fell off the cliff. So kind of like, did we go a little bit too high, and this should have been the high for Bitcoin that year, only 5,000, and we kind of jumped a cycle. You know, just a random thought. I don't think that's the case, but I just wanted to mention that here. So we do the low to the high again, and then back down to the low, and now where does it put us? All right, so it puts us here, pushing the 1 on the fib level and pushing up towards the 1.618. So I thought that in many videos back, I'm not going to clip the video and put it in here, but I put that the highest that I thought this specific rally could go before a correction would have been around the $35,500 level. And now, if you've been keeping up with the channel, 30K is actually where I have my top, and we're starting to see some bearish signs develop now that are kind of confirming it. But if, you know, with new stimulus in the United States and a bunch of money gets pumped into here, even with these bearish signs, we could correct down just slightly, 3, 6, 7%. Down, and then have another pump before we get that huge green liquid or red liquidation candle that just drops us down, you know, 30-40% that we're used to seeing in Bitcoin. All right, so this tool here has been very, very helpful for me as far as the long term for predicting when I could expect a big swing or move. And you know, we're on the monthly candle here, and I'm on the logarithmic scale here just so you can see the big picture here of how Bitcoin has been playing out. And you know, Bitcoin is one of the best performing assets over time, and in 2020 it's actually not the best performing asset yet because Tesla, you know, has had, I think, over 2,000 or almost 2,000%. Don't quote me on that, but you know, so Bitcoin, if you bought in down here during the Corona dump in March of 2020, from here all the way up, we're looking at a, let's see, so far, that's a move of 600%. So, you know, like, and there's so much more room to grow, being a scarce asset that is deflationary, since we're never going to have 21 million again since some are lost or burned. And, you know, we have 18 million or so mined, only 3 million left to be mined in the next coming years. All right, so with this tool here, I've been using just basic fibs to tell me where we are at and where we are going. All right, so now if we take this one and we just kind of zoom in on where we're at, we passed the 1, and we kind of had some resistance here on the 0.786, and on below it I have these two teal and blue lines. This is the 20 weekly exponential moving average and the 20 daily exponential moving average. The weekly is the one that's lower. Typically in every bull run, and I know this is getting super repetitive and you're tired of hearing it, but as we come up, we have either ridden the daily or we have come down to touch the weekly and then moved on to continue. And this goes all the way back. We came back, touched the weekly, we stayed above and followed the daily all the way up. And what are we doing right now? We're following the daily. But we are severely overextended. We can see that here on the relative strength index at the bottom. During these rallies, we have gone way above 70, come back, stayed above 70. Then we have our long consolidation period. We came up above it, came really high, and you know, 95-ish is about the highest we've ever gotten here on the monthly. But now if we kind of zoom in a little bit with the same whole picture here, now we're on the weekly time frame, you know, it's not uncommon for us to stay above this a long time, so I definitely don't think we're out of the bull rally. But there are signs in the shorter term that's saying that we could correct down. So The biggest thing I wanted to point out with this is that these trend-based Fibonacci extension tools are very, very handy for letting you know where we could see correction, where we could have resistance, where would be a good point to take profits. And with me mentioning that taking profits at 30 cents, or sorry, $30,000 is a really good idea, is only because we've been pumping so hard for so long. It seems like a very good place to take some profits if you haven't already, because if it corrects down, those profits are gone. You have to wait until the Bitcoin comes back up again. So now let's take just the actual Fibonacci extension as it is. Where is that one at? Why can't I see it? There it is. And let's go from the high that we had there down to the low. All right. The only difference between these two tools is how it's picking where the lines actually go. So with the trend-based Fibonacci extension, we're going from a low to a high, then back down to a low. So it's taking the current market structure into account as you do it. Now, with this one here, all I'm doing is going from a high to the low, and we're going to see where we kind of go from there. And if we look right now, if I went from the previous high of around 19K down to the low before the actual Corona dump in this market cycle here, we are actually exactly at the 1.618, which is right here perfectly at around 29,900, 30,000, right at a big even, exactly where all of our other patterns and stuff formed together and showed like it was going to hit 30K. So when I see this line up on top of other fib patterns that we see, being overextended, having lots and lots of people, if I hear everybody saying buy Bitcoin, I think exactly the opposite. I think, ooh, if everybody's buying, man, it's about time for me to go take some of my money out. And with me being an investor down in the $5,000 to $8,000 region when it comes to Bitcoin, and I have bought a little bit more as we've gone up and sold some, this is the time where I think we are about to hit a top, have a big correction to where I don't want to lose that money and I could put it into something else. So I have already sold about half of Bitcoin just to put into other things. And a lot of people don't agree with what I do, but I mean, this is my personal strategy and how I did it. I see plus green on something, I sell, and if I see a lot of minus red numbers on something else, I buy. So I got out of Bitcoin, went into XRP, and that's why I'm going to have an XRP video right after this to kind of show you my thoughts on the whole case and why I think that has the highest rate of return. So if I say, just for numbers purposes, I sold one Bitcoin right here at 30K, that's $30,000 that I could invest into XRP at sub 20 cents. If XRP goes from 20 cents back up to 60, that's a 3x return on one Bitcoin. That's 90 grand. Well, if I have to wait for Bitcoin to get to 90 grand, I do expect that to happen, but think about the time difference in the percentage gain returns. So remember, you can love a crypto and all that, but if you're in this crypto for the fundamentals and you want to see it succeed, you have to understand that there's going to be ups and downs with the cryptocurrency. And right now I'm expecting that we're at a top, so even if it does go higher, I will still be able to make my money back in the other cryptocurrency, and I always don't sell everything. So I still have some Bitcoin that still is making me money if it goes up, and vice versa, losing me money if it goes down. All right, so right here we have Bitcoin coming up to the 30K mark, which is the 618. So let's go ahead and get off of this, the weekly chart, and go to the monthly again. We can see that if we came up to the 30,000 and then we were, say, to correct down to the 414 here, let's see how much of a rejection that would be. So we're looking at about a 10 to 12% rejection if we come down to the 24,000. If we come back down to the 1 here, where we actually have a candle change during this monthly candle, we're looking at a 33% drop, but it's putting us just below 20K, which I think at this point 20K is going to be a very, very strong support for Bitcoin. All right, so let's go ahead and zoom into the chart that I have been using for the past couple of weeks to trade Bitcoin. And where I actually had the predictions and stuff in the last couple of videos here. So on this one, I actually used a trend-based fib extension, and I'll just zoom out just for a second so you can see. I went from the Corona dump to the high that we previously had when we set an all-time high, and then back down to the low when we bounced off of the 21 EMA. All right, so from there, we're going to zoom back in. I'm just going to go to the 4 hour because that'll give you a better picture of where we're at. And if you zoom in onto this trend-based fib, right here at the 1, lines up exactly where we lined up on the other fib mark. So it's just showing me that this is going to be a very, very common area for people to go, okay, I'm either going to buy or I'm going to sell here, right? So with how overextended we are and how everything's going, I definitely think this is going to be a sell area. And the last chart prediction I had here was that we would break out of this symmetrical triangle that we formed. And if I zoom in more, we'd break out of this symmetrical triangle, and we needed to maintain this trend line as far as to stay severely bullish, right? If we broke below around 25.7, I would suggest that we would be more bearish, of course, because we're going down, and that our support levels would be the daily exponential moving average, as well as our other fib lines, so the 0.618 specifically, to maintain bullish momentum if we drop there and held strong. And you can see here that this also coincides with where the market control point is here. So we see that right here at around $23,500, the VBVR is really strong. We had a lot of traded volume in this range right above the 0.618 fib line. But look at the traded volume above it. So a drop right here could be very, very fast, very, very quick, especially since we're going up. So ideal scenario is we drop about 15–16%, we find support on the daily EMA, and we bounce up from there. And we can continue going up to, just like we saw in the first trend-based fib, is up to around 35, 36,000. But I definitely think that at this point, with as much fear and stuff in the market, it's more likely that we would correct down. And I've said that before, but we're in new times here. The U.S. just printed the stimulus checks. There's potential that another a full 2,000 could come. And right now, this is the USD to Bitcoin chart. And if the U.S. dollar is being devalued at this rate, Bitcoin could go up to $35,000. But $35,000 isn't worth the same as $35,000 4 years ago. So, always take that into account here. So, best case scenario, I say we pump up to the 35, and then we come down and we retest around 30, and that is our, new support, no lower than 25, and we never see $20,000 Bitcoin again, and then we slowly make our way all the way back up to around 80 to 90,000, which is why I actually showed the trend-based and this fib on the Brave New Coin Index. Is we saw that we pretty much every cycle got up to around the 4.236, or at least a little bit higher. So the 4.236 for this cycle is putting us at around $75,000 Bitcoin. So the same percentage jump above, the last one that we had before was from this little cliff that fell off that we were talking about up to the top. So another 225% on top of where we are right now. And I'm just going to do about 200%. So with the devaluing of the US dollar and everything, this is why I definitely think $100,000 to $200,000 Bitcoin is very possible in this next cycle over the next 1 to 2 years. Although these full cycles are around 3 to 4 years because of the halving and everything that goes along with it. So that's my take on Bitcoin right now. If you go even shorter into, like, say, the 15-minute here, it's definitely getting a little bit bearish here because we're getting more of these tops and rounding down, the little M patterns here. We do have like what looks like a little W forming as we got back above this trend line, but if this trend line doesn't hold, we're definitely going to see more of these big red candles here of rejection, because I think smart money is going, it's a little overpriced. We could sell some now and it goes down. You can argue market manipulation and all that, but whatever the case is, I definitely think that this is going to be our local top, and we'll have at least a correction down to the daily. If not, all the way down to around 20K. So I hope this was a little bit more informative on how I kind of use the trend-based Fibonacci as well as the Fibonacci extensions to figure out where tops are. And it's not just I put them on there and I go, yep, this is the one. I will put it on 500 different ways. I'll go, oh man, I need to see if this way works. Does this one line up with another one? Maybe if I just go from here to here to here, those lines will line up, or whatever the case may be. I've tried to find something, actually right here, just from here to low to there, we can see that the 618 again lines up with 30K. And this is on a much smaller time frame. So, I try to find trends, and if everything lines up, I go, okay, this is probably more likely to happen than the other, because everything in chart analysis is probabilities and patterns. No chart analyst knows for sure, but everything that they see, if more things line up based off of how long they've been doing it and how many trends they've compared, they have a better idea of going, well, every time I see this, there's been like a 70% chance that this is going to happen. And that's all this is. And then, when you actually trade and do things like, say, here on Bybit, longing and shorting, we're going, okay, there's an 80% chance that this is going to happen. I know that if it goes above this mark, I'm wrong. I need to stop out. If it goes down to here, I can enter in the trade at this point, and as long as it doesn't go above this, my pattern's still effective. That's the whole goal of chart analysis and doing all of this. So that's going to do it for this Bitcoin video. Stay tuned. I will have one on XRP and kind of going into exactly why I took a lot of profits on my Bitcoin, moved it into XRP, made my XRP bags even bigger. One, because of dollar cost averaging, and trying to keep my entry point below 20 cents as best I can, because I'm definitely in the long haul for that one. And I'll show you what I see on the charts as to why I think XRP is going to go crazy soon. So I'm going to see that. I'll try to link that video to this one, but I'll edit this one and put it up first before I do the next one. So I will catch you guys in the next one. Like and subscribe. Talk to you later.